to Global Markets Radio Week Ahead. I'm your host, Andrew Spanton. Sunday, October the 13th, 2012. Time is almost 6 p.m. Eastern. Dollar gapping down, risk gapping up as China numbers a little bit better over on Saturday. Investment up. We got big numbers coming out this week, though. I don't necessarily know that those numbers are really going to hang so strong. But certainly money supply better than expectations. Trade balance much higher, $27 billion. So that's going to probably help support the Aussie, Kiwi, risk on, commodity currencies that do better, obviously. But it's a long week. And one of the things that I think is so important, and, you know, it's better you see this really on the daily, but I got to tell you, I know some of you don't agree with this per se, but, you know, this top here, this was Romney. This was Friday action. Pretty sure. Oh, it doesn't look that way. Thursday, Friday, Saturday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday. Correct. So I am right. What do you know? We gapped up on a Romney debate victory, only to be basically drilled the rest of the week. Now, in my opinion, again, I've said this before, in my opinion, a Romney victory can't be initially good for the stock market. It doesn't make sense that it would be good. Bernanke, Geitneoo would be gone like the wind under a Romney victory. You would think then the stock market goes down on that. Maybe we recover at some point and rally for the long-term prospects of lower debt. But I don't know. Third base. I'll tell you what, and we have a nice debate coming up on Tuesday. So I would imagine, looking at these S&Ps on a daily chart, I would imagine we continue to sell off. I could see us coming into 1,400 in the next 2 days. And then maybe have a nice turnaround Tuesday for a change. When's the last time we had a big reversal on that? To the upside. And maybe Obama has a victory. And we go back to the moon. But, you know, as far as a major reversal last week, I don't necessarily per se see it. I think that obviously some earnings are coming down, but the numbers basically have not been so horrible. Jobs numbers we see getting much better. Jobless claims, ridiculous. And one little note, by the way. Obviously, those of you know that I have not been doing my daily recaps, but they are available for premium, which you are able to join for the rest of the year. But one of the things also, by the way, you know you can get premium for free, is if you trade through my company with FXCM UK. You cannot be in the United States resident, which is a joke, but you can't. You have to be outside the U.S. And if you live outside the U.S. and you trade through Global, my company, with FXCM, you will get premium for free. In addition, if you do enough volume, and it's not a huge hurdle, if you do enough volume, I will give you back part of my rebate, as much as 3/4 of a pip round turn. So you do a 100K transaction, round turn, I'll give you back $7.50 on every 100K lot you trade, depending upon the pair. I'll pay you every other week. I'm a IB with FXCM UK, and I can give you premium for free value-added resources, things that cost money, just by trading through my company and FXCM. It doesn't matter how much volume you do, how big your account is. You still can get premium for free and the resources, maybe not as big of a rebate. So if you're interested in any one of those programs, and again, if you're trading and you're not getting a rebate, you're just giving extra money to that market maker. Now, yes, I'm going to benefit from it, but who cares? You're going to get back a rebate, and if it's the same spread, you're doing better. So email me if you want to find out more about this program, info@globalfxllc.com, my rebate sharing program. I will send you your cut every 2 weeks, wire transfer or PayPal. PayPal takes a little longer. So, again, if you're not getting a rebate, you're doing a big disservice to yourself. And, again, my rebate will go as high as 0.75 of a pip per round turn. That ain't chump change. Think about it and email me. So, again, look at this S&P chart. We have a ton of data coming out this week. And I don't see how the numbers are going to be that good. But the U.S. side, we have a ton of data coming out. A litany, a barrage, a salvo. Oh, baby. I'm in a good mood because the Jets won. Yeah, they play New England next week. They're going to suck wind. But U.S. side, we got a ton of data. Just a barrage. Retail sales starting off on Monday. Empire Manufacturing business inventories as well. Boom. Then on Tuesday, we get CPI, which you know is collapsing off the face of the earth. Ex-food and energy, of course. Foreign flows of capital, capacity utilization, industrial production, and NABE, housing market index. Tuesday. Makes for a nice turnaround Tuesday if you get some decent numbers there. And a deflationary environment, which we know Burn Your Ass Off will have to come to the rescue. That's his big concern. And, of course, we get other numbers. We get CPI out of London on Tuesday, German Zoo on Tuesday. That's also very important. And, by the way, tonight we do get China CPI. So that could be very interesting. We get China GDP, which is more important late in the week. But, you know, looking at this weekly chart of the dollar index, I could see us coming in a little bit more. But I don't know if we're going to break this level. I see us rallying more up to here on the dollar index. And again, I think the market's nervous for a Romney victory, which would not be good for stocks and the S&P and risk. If anything, rates would be going higher. We know Bernanke is vowed to keep rates low. So, take a look at gold. I would think a Romney victory is bad for gold, believe it or not. I think gold under 1,800 is a dead short. As long as we don't take out 1,800, and you must have your discipline, get the frack out. If we take out 1,800, you don't want to be short. But if this gold doesn't take out this, I think we could easily come in sharply. Again, a Romney victory is bad for gold. Gold collapses $500. Absolutely. Wednesday, we get London minutes, claim and count as well. Big night for that. We get U.S. side a little bit on the light side, building permits, housing starts, crude inventories. But then Thursday morning in Asia, Wednesday night in the U.S., we get China. GDP expected to be 7.4%. Industrial production supposed to be at 9%. I don't think these numbers are going to be very good. I think they're going to be so bad, then the market's going to rally on talk of China easing because the numbers are so bad. Thursday, big day for the U.S. We do get London retail sales on Thursday. That's important. Spanish 10-year bond auction. That's also important. U.S. unemployment claims with Philly Fed. Big. And then Friday, U.S. existing home sales, Canadian CPI in the U.S. session. That's pretty much it. You know, other stuff, but nothing of major, in my opinion, importance. So this gold to me looks weaker. That should be dollar index higher. Commodity currencies should be weaker. I think this gap up is an opportunity to sell. Weekly chart in the euro. As long as we don't take out this level here, as long as the euro doesn't take out 130.75, even 130.50, I think it's fine. On the short side, I think we head back down. Roll over. But again, over 130.50, we're gone like the wind to the moon. I think a lot of other currencies, though, look more interesting on the euro side. Euro yen. Wedging on a weekly. We break through par. We can roll over big time. We take out 102.60, 70 to the moon. I think you really trade, but again, the S&Ps are going to be key. Euro news is going to be key. Nothing major I saw over the weekend. Euro sterling, nice little topping formation. Shooting star looks to me like it rolls over. Does it collapse? I have no idea. But it certainly should come in. And cable should be the relative strength winner. Cable reversed nicely. And if sterling dollar does take out 160, 150, breaks this whole downtrend, goes blue and gone like the wind to the moon. So sterling is now on a weekly chart, certainly over the last month, become way oversold. It was weekly. And euro sterling looks like it's rolling over. Cable looks like it wants to pop. Like the wind. To the moon. Euro Canada, I think came back nicely. I still think pole, flag, ready to pull again, 130. I think it's going to come in the form of dollar Canada coming in on the upside, going up. No real sign on the weekly, but certainly encouraging. You got Doji, another little wedge here. A little bit, you know. And ready for a pop. Ready for a breakout. And that dollar index also looks like it wants to pop. China's slowing. Maybe. Yes, that trade balance was good, but again, imports versus exports. They might be exporting, but they're not importing. They have no demand. So going back to the euro Kiwi looks good. Nice little comeback. I know it didn't take out this high here. I would like to have seen that. But it held the retracement of this big, nice tower bar. And that is bullish. Big time. Held the 50. Yeah, we can pull back even a little bit more. Maybe double bottom and retest this level. But I think this is on the start of a leg up. I mean, there's a 3-year chart weekly. This baby is due to break out at one point. 3 times the charm, mama. And if this Euro Aussie were to take out 160 clean, we go right to 170. Euro Kiwi, sorry. And that would mean a New Zealand breakdown. And that would mean a Kiwi heading towards the 76 level, which you would think it should. Certainly the stock market rolls over more. But I think this Kiwi could easily come into the 30 EMA as you see that line intersecting with it. Bang. And that's about 80.75, so that's 100 pips. We take out this level here, 81.50-ish, say goodnight. Free fall. Definitely down to 80.75. Should be an easy trade, in my opinion. Euro Aussie. Another one. Pulled in, broke out, monster move. Definitely breaking the whole downtrend channel. Swing it over here. Big time. And you see where it was. Where it could go. Oh, baby. But the Kiwi, I think, again, Euro Kiwi, I like better. I think Aussie Kiwi wants to pop a little more, even though there was a rate cut. Oversold, ready for a rally. And it's time for the Kiwi to become the relative strength loser for a change. Love this Kiwi short. Dollar yen. Sorry. It just can't get going. All this news, all this stuff, NOTA, they will get inflation higher. Yeah, right. They've been saying this for as long as I've been in the business, since 2002. And they can't get it going. No matter how much they throw at it. Makes you wonder why the U.S. thinks they'll do it differently. They'll make it work. The Japanese are suckers. They don't know what they're doing. Okay. Dollar looks like a short again. Over 79, though. It'll break this whole downtrend channel. And then to the moon. But, I still think we sell off into Tuesday. It should be easy. There was no great news over the weekend. Again, dollar Canada looks good on the upside. I like it. And I like the gap that we just had. I think you fill in the gap for sure. And we look at pound Aussie, for example, another one. Even though it came in, it still looks good. Still looks like it's going to hit the top of this channel line. Easy. It's 400 pips, people. You want that? You want it? Pound Kiwi. Another one. Certainly this channel line here. That's double par 05. That's almost 900 pips. You want that? You want it? Oh, baby. We could pop 300-400 pips in the next 2 days. I think this New Zealand dollar looks like death. So that's it. Again, I think we're heading to a very tumultuous, very volatile period in the markets. I think we're starting to see signs of chinks in the armor for the bulls. And I think when you look at some of these charts, if the market really does come in, I mean, look at this, New Zealand. I mean, talk about a range trade. I mean, this thing breaks back down in the fold. We're talking about 600 pips. And the crosses are where you see the biggest bang for your buck. Like I said, pound Kiwi. I mean, look at this baby. I mean, I do a 10-year chart. How about that? You're seeing a 3-year chart. Take a look at the 10-year. Remember, this is one of my trade ideas for the year. I've been wrong. I got 3 months left, though. Oh, baby. There's a monster bottoming process. We take out 2,100. This thing go to 2,200, 2,250. Oh, yeah. I mean, you look at the historical. This is over the last 10 years. This baby was triple par at some point. Triple par 20. It even hit there again in 2006, 2008. So, again, this is a risk-off trade in my opinion. If you believe in risk-off, this should go higher. Believe in risk-on, you run the spread, blah, blah, blah. Oh, baby. Dollar Swiss, we didn't look at that. Looks like she wants to have a little bit of a pop. You know, I could see us going either direction. You know, it's become oversold. It worked off the oversoldness, but it has not bounced that much. And now if we take this level out, say goodnight. So I think you really got to maintain your discipline. Under 92.50, this baby's toast. We should go right to that 90.50 level that I've been talking about. But I don't see how you do that with the stock market that's going down. So in the meantime, I think we grind up. But again, my game plan is for a turnaround Tuesday. Tied at 2. Obama. I hope not. But I think the market's going to think victory. A V. Weekly chart, Australian dollar. Another one, same chart. Down to the fold. Back in the fold. Monster wedge. One of the biggest wedges you'll see in time period wise. I mean, look at that. Jimmy Christmas. And they're cutting rates, but it still hangs in there. Okay. I get it. 10-year chart. Again, in my opinion, we should be here. Certainly here. What a joke move this, huh? Last couple of years. Oh, baby. All right, so again, if you're interested in any aspect of my business, again, that deal I'm offering is only good for the next couple of weeks. Maybe mid-November, end of November. And you're grandfathered in for life. 0.75 per round turn. Think about the volume you do. Think about the money you're giving away. That could be in your pocket. I benefit, but hey, it's money. It's your trading money that you're just giving to your market maker. And if you trade with FXCM UK already, it's a problem. We got to figure out a way. But it's doable. So again, email me, info@globalfxllc.com, and stop not getting your rebate. It's stupid already. Andrew Spandick, Global Markets Radio. Big week ahead.